Uranium, of course, like as I've said multiple times, seems like a good investment, so today we're going to be continuing and looking at yet another uranium company. Hey, my name is Tucker Kraus, and in today's video I'm going to be taking a look at GoviEx Uranium. It's a much smaller company, and their stock price hasn't been doing all too well compared to some of the other companies, and so I would like to find out why and see if they're actually worth it to buy or if there's a reason for that decline. So let's get right into it.
So we have GoviEx Uranium here on the Toronto Venture Exchange. We have them trading with the ticker GXU on over-the-counter exchanges in the US with GVXXF. It has a market cap of about 90 million US and a very, very cheap price per pound of only 45 cents, which is really impressive. So let's quickly hop over to the stock chart here. So I have the GXU chart here just because it has the higher volume. And so this is what had me mainly interested in the company, is we've seen it's basically since about February of this year, it's just been heading eternally downwards with little updates here and there. You can see same thing here. Ran up a good bit and we've just been eternally falling, whereas lots of the other uranium companies since that big run up in February have gone close to that a few times again, whereas GoviEx has just been falling. So that's pretty interesting. That makes me think it could possibly be a good buy opportunity, but let's see. Just to look at a couple of slides from their presentation, we can see here this shows each of their jurisdictions. So they're in a couple jurisdictions across Africa. So at least they do have some jurisdiction diversity, though I'll get into a bit later what I think of each of these jurisdictions exactly. And we can see here their grade on average is not particularly high, but they do have a ton of pounds in the ground, hence the excellent price per pound performance. So here's their proposed development strategy. We can see they have the 3 mines here, and one of them is basically ready to go and set to produce in 2024, and our second mine here is just missing that pre-feasibility study. And once they can get that, they'll be able to move on, and they'll be able to start producing there by 2026. Also note, 2033 is not the end of production, just the end of the chart. But if they're able to actually come online this soon, that'd be great. Chances are they'd actually be able to produce during the uranium bull market. Onto capital structure, not a big fan of what's going on here. We have tons of options and warrants, and fully diluted, they have an absolutely insane amount of shares outstanding, especially relative to their market cap, which is of course lower, even lower than in the presentation here. And so we can see here that at the least they do have a good bit held by Denison Mines, Cameco, and insiders, which is good to hear. That does at least mean that, okay, they have a decent amount of, chances are, decent amount of CEO board ownership when we're looking at insiders, and we can see it being owned by very notable uranium companies. That also helps, but in general, not a big fan of the dilution, but at least it does mean they have low debt. Looking at their first project here, we do only include the company's share here, but when you look at all of it, it is actually a substantial deposit. Again, why their price per pound is so low, but just going back to the company's share there, still about 110 million pounds in the ground. They have a 10% royalty with not even, though they do have a lower grade of only 0.13% here, with a quite high initial and total capex of $347 million and $648 million respectively. They have a higher OPEX of $22.20 compared to some of the other companies I've looked at where it was sub $15, and onto construction. It's only planned to be constructed for 2 years, which is really fast. It's good to see, and they plan to produce for 20 years, which does explain why their sustaining capex is so high. And because they'll be able to open in 2024, at least that's what they want to do, that would of course be great, because like I said earlier, they'll be able to produce during the uranium bull market. And because each project for GoviEx has multiple small deposits inside of it, all the uranium is very spread out, so that's likely why the OPEX is a bit higher here. Also, Niger is an excellent uranium jurisdiction. They're kind of known for producing a ton of uranium, though it's a very poor and politically unstable country. So their next project here is quite a bit smaller, though they do have 100% ownership over it at about 60 million pounds in the ground, a slightly lower royalty of about 9%, though a significantly lower grade. I have this converted to parts per 100 from parts per million just so it lines up better with the first mine, but we can see here that it's not high at all, and so that would definitely explain the substantially higher OPEX here at $31.10. Though again, at least it's not like 50-60, but that's still quite high. And now, though the total capex and initial capex are significantly lower than the other mine, which makes sense because it is a significantly smaller mine. And again, the construction only is expected to last for 2 years, and they plan to produce for 11 years starting in 2026. So this one might be there right near the end of the uranium bull market, market, depending how far into it we are. And Zambia, which is where this mine is significantly less poor than the other jurisdictions, but the CEO did mention that Zambia revoked their mining license last year, though GoviEx was able to successfully appeal it, so there's definitely some risk here. Project 3 is a exploration project. We have 30 million pounds of uranium in the ground, 60 million pounds of copper in the ground, and 21 million ounces of silver in the ground. I'm not sure if these copper or silver grades are high or not because I don't know enough about those resources, but we can see it's a fairly low uranium grade. And again, I'm also not sure if this is a large deposit when it comes to copper or silver or not. Though in an interview with the CEO, he did also note there's likely gold, and in that same interview, he did kind of side-handedly mention that they were planning to sell this deposit, so it won't be included in the discounted free cash flow. So, like I noted just before this, that this won't be including their exploration project since they don't have production plans for it at the moment, and their CEO did kind of, those is an older interview, so maybe plans have changed, that they were thinking about selling it. And something else to note is that the spot price has risen the last few days since spot, whereas it was lower for previous DCFs when we were looking, because it was only about 30.45, though it doesn't really matter here because as we can see, it does not look good for them at current prices. Some of the other ones were maybe, oh, at current prices, they're significantly overvalued, but in this case, they don't even, like, deserve to exist as a company at current prices, or well, that's kind of what this means, is that they wouldn't exist as a company at current prices with negative here. And same thing, even at $60 uranium, they still have a negative fair value, which is really not good. But if we go to $80 uranium, then they absolutely explode because then they're able to get past all of their higher costs, and because their price per pound is so low, they're just able to blow up with almost 300% difference here. And though, to be fair, when I ran the calculation for global atomic and fission at $80 spot, they also came in at very similar undervaluation, though note for global atomic, I did the 2x production plus zinc plant. So in general, if we saw zinc, or I mean, sorry, not zinc, because I just said it. If we saw uranium price, say, go to $80 to $100, GoviEx could be actually a really good bet here, because as those prices get high, as those uranium prices get higher with how low their price per pound is, they could just go crazy, whereas some of the other companies do have a higher price per pound, but because they can produce at lower costs, they're a lot less risky. So if your risk tolerance is very high, GoviEx could be a really good play, especially because their price is pulled back so much, though if your risk tolerance isn't quite as high, you're not willing to bet on, say, $80 uranium, $100 uranium quite as much as you would 60, then it might be an avoid. That's of course up to you. This is not financial advice. So thanks for watching, and I will see you next time. Comment down what else other companies like to see below as well. Yeah, okay, that's outro.